Laishram is saying have a position of bearish credit spread at 48,300 put established today. No, put is a bullish credit spread. You confirm whether you are bearish or bullish. 48,300 is above the market, so this is a bearish credit spread, so this must be calls. All right, yeah, okay, call, you said that. At about 9:42, I think this is the time you established that. Today's the expiry. All right, we have some range extension to the downside. Now we did discuss about this VWAP holds, it is going to push the auction down towards this VWAP. By the time it is at this VWAP, you look at Nifty. Okay, so Nifty, what it is doing, it made a high, came down, went above the high, and if it comes down again to VWAP like Bank Nifty, it also falls. Maybe it stays above VWAP but it falls, then you can hold your bearish credit spread, because the Nifty also is kind of catching the weakness from Bank Nifty. But if this comes down and Nifty merely goes sideways, then you book your profits here. Whatever profits you are getting, you get out, because then what it means is that Nifty is strong, and if Nifty blasts to the upside, it will pull Bank Nifty above VWAP, and then 48,300 is very very close to the current market price. All right, so just be aware of that. And in any case, like if it accepts above VWAP, you get out of your trade, because expiry day can give some explosive moves, and your long strike, I don't know how far that is. This is 48,300 short, that's all right, but let's say you're 500 points away for your short long strike, then you have a big possibility of a loss. All right, see, why we use credit spreads is because it helps us get away from CMP, current market price. This is where our safety net lies, right? If you are close to the CMP, this is barely 200 points on Bank Nifty, is nothing for Bank Nifty, I'm telling you. So if you are so close to the current market price, you don't have that safety net, please understand. And then this market can hurt you very very badly. So in itself, it's not a good idea to stay so close to the current market price. But let's say even if it comes down to VWAP, you book your profits and get out of it, because this is risky. See, when you have this kind of a discord, all right, see, I'll show you. See, Nifty is clearly developing value higher, right? So that is clear strength. Now when you come to Bank Nifty, Bank Nifty is in a range, all right, is in a range. But even if you look at the range, it is in the upper half, or kind of overlapping to higher kind of a scenario here. Maybe overlapping in the upper half, and we are still staying above yesterday's VWAP. So yesterday's VWAP is often obviously a definite demarcation between bullish territory and bearish territory. All right, when it comes to a little beyond the day's range. So compared to yesterday, if we say that yesterday's auction is continuing, because we are inside yesterday's range, so if the yesterday's auction is continuing, what you can see is that according to yesterday's VWAP, we are in a bullish territory. Now you have a bearish position, that too on a Bank Nifty, that too a credit spread, that too very close to CMP, right, and on an expiry day. So what can happen, the gamma would kill your position. Let's say the market goes higher, since it is expiry and you are so close to the current market price, your strikes will become at the money very very quickly, and then the gamma will kill you, because the gamma on expiry day can be very very ruthless, right? And you don't understand why your premiums usually did not move this much and today they are moving. That is because of gamma. So it's okay, like even if the market tanks and your trade works out and you miss out on some profit, it is always better. See, our primary job as traders, we are not traders at all, that's a misnomer. We are risk managers, all right? So our primary job is to protect capital, right? So you don't make some profits, big deal, does not matter. But if you protect your capital in the process, if you avoid some emotional roller coaster, some heartburn, some blaming yourself of why I had this position and that for the sake of some profit, give up on the profit, because money will come back. Money can come back. Once you have that emotional deficit in trading, it's very difficult to fill the void. So don't get into that deficit of confidence. Don't get into that negative emotions if you can avoid it. And for the sake of what? Some small profit, absolutely give up on the profit. Enjoy the day, watch a Netflix or Prime series, something, but don't put yourself in that difficult situation if you can avoid it. So good job, good decision. Nice that you got out of your position. That too at some profit. It's always good, always better. It's not about the levels, right? Let me clarify my stand here. It's not about the levels. So I did not tell you to exit your trade because your levels were correct or levels were incorrect. It's the objective that you are trying to achieve, right? So if you are using credit spreads, what I understand you're trying to do is to make some consistent income out of it. Now, if you have certain objectives and your trading actions are mismatched to the objective, you won't be able to sustain in the long run. See, this credit spread might work, okay, but if you keep doing this and if you make a habit of it, one day will come where your credit spread will be destroyed, and then you again apply it and again it is destroyed. So 2 or 3 such big losses and it becomes impossible to recover from it. But if you keep fair bit of distance and if you are following the rules of T-3 and everything, then what happens is you end up making money over a long period of time, and even if things go wrong, you get time to adjust it, you get price distance to adjust it, and the chances of an adverse outcome are reduced drastically. Make sense? So that is the reason why I said that you should exit that particular trade. That does not mean that this is a bad place to short. So we did discuss about this. We also said that okay, if Nifty is now going sideways, I mean it is coming a little down, but still the VWAP is rising. So if Nifty now takes support here, Bank Nifty will give some move to the upside, right? Understand? I mean it's not about where you're shorting, where you're buying. It is the objective that you are trying to achieve with that particular type of trading, okay, which is a little bit not correct, little bit off, and that is why I suggested you should get out of that trade. Bullish credit spread should work fine, and that see the difference. You have established it last Friday at 47,000 call. So let us analyze that position. So Friday, right? Today is Wednesday, Tuesday, Monday, Friday. So on this day, you established it. Market was trading around 47,800 or maybe 48,200, and you established it here at 47,000. Now, what are the hurdles when this was happening? There was this rejection, right? Tail was there. There was a potential failed auction. There was this HVN, and then there was this gap. So see, multiple hurdles were there between the current market price and your short strike, and this HVN was there, which was respected the next day. So you can understand now is that this position was good, and obviously it will give you max profit, and since it was established on a Friday, that is exactly T-3, so you got good premiums hopefully for that, and they should work fine today. So this is what credit spread is for. Now I'll also go a little ahead and say, like, you have a credit spread here and it's a bullish credit spread and it's working fine. Just because there is exhaustion, applying an opposite trade, okay, is not a good idea. Not a good idea. I would not do that. I'll tell you the reason. The reason is this bullish credit spread probably giving you 0.5%, maybe 1% at best, but I don't think it was giving you 1%. 0.5% at best on your capital. And this particular opposite credit spread is risking a lot, is risking too much of your capital against this small profit, right? So when are you allowed to establish an opposite position is when your adjustment levels at least are taken out. So let's say for instance this was your adjustment level and this low, and this is 47,000 is your short strike, all right, and let us see what this is. 48,200 to 47,000, so this is 1200 points. So in between comes 47,600, and then above that you have this low, and then you have this HVN. Now here the market did come below it and it did create a scare, but your adjustment level is this 47,600. Now if you do anything above this, there is always a possibility that market will resume its up move. All right, market will continue to move higher, it may not come down. But if it breaks and starts accepting here, then you have to roll down. That is one. And then you can think about establishing a bearish credit spread. But it is a safety measure. All right, it is not a tool to increase your profits. There's a difference. This is a safety measure. It's not a profit enhancement measure. All right, this is only to be deployed because see, even today the directional bias is clearly up and you're going against directional bias in this case. This is not advised. But yes, if it goes lower, then what happens? You have a value area formation, composite value, and you are leaving it to the downside. There is a fundamental change in the market there. And then in that case, you can roll your original position down and establish a protective position in terms of a bearish credit spread. That is allowed, but you don't use it for improving your profit a little bit. Let's say you are making 0.5% and you employ another one here for 0.25% and try to make it 0.75. This is risking too much, because if this goes bad, you are not losing 0.5%, you are losing much more than that. So that's not a good idea. Okay, so in case you are doing it for that, not a good idea. But yes, if it goes below your adjustment level, then your original position is in danger. Then you try to protect your original position and supplement it with an opposite position allowed, but not above this. This is not the place where you establish an opposite position. All right, I hope that clarifies it.